and investment in knowledge pays the best interest.
Abundance Stock Advisors. Let's make money.
Hello friends, welcome to yet another video of Abundance Stock Advisors. So if you are a serious stock market investor, think of joining our YouTube channel. Friends, it's a game changer in the stock market advisory industry. And to know the benefits of joining our channel, watch our channel joining video, which is coming up here at the top as a suggested video, and the link can also be found in the video description below. To get notifications on many such amazing videos, please subscribe to our channel and press the bell icon. So, what exactly is technical analysis and why should we study it? In this video, you would learn what is technical analysis and how is it different from fundamental analysis. You will learn the underlying principles on which technical analysis is based, why technical analysis has been successful over the years, and some advantages and disadvantages of using it. Towards the end, we will see why learning technical analysis is so important for us as stock market investors. Friends, we have an amazing video-based online technical analysis course on our website in English language, which covers basic and advanced technical analysis, both of them, through some real case studies. It practically covers everything about technical analysis, and it has been designed and created by our vastly experienced technical analysts who have spent their entire lives in the stock markets. Friends, we are sure that this course will add a lot of value in your life as stock market investors. So do take some time to go through it. Now let's get started. Also, there's some motivation for you towards the end of the video, so stay tuned. Now there are essentially two approaches of analyzing a stock before you invest in it. One, technical analysis, and the other is fundamental analysis. Now in fundamental analysis, we study the overall health and the operational environment of the company in detail. This is done by closely studying the company's income statements, balance sheet, cash flow statement, the future growth prospects of the company, the reputation of its management, the overall health of the industry in which the company operates, the applicable government policies in it, the overall health of the economy, etc., etc. And based on all these factors, a calculation is done to understand how much is the share price worth today and what could be its future value. Now, technical analysis operates in a different way. It feels that you don't have to study all of these fundamentals about the company. It works on the principle that the current share price of the company has already factored in for all those fundamental parameters, and the current share price and its operational volumes are a reflection of the company's overall health. So at a very broad level, in technical analysis, we study the current price movement of the stock, its past price movement, its trading volumes, and some other technical parameters, and then make a judgment regarding the future price and direction of the stock. And all of this is done by studying the chart of the company's share. Technical analysis simply involves putting all the stock information like prices, volumes, and other indicators and oscillators on the chart to finally predict the future price of the stock. It's as simple as that. You can analyze a stock on a chart by seeing the stock data for different time frames, like data on a daily, weekly, monthly, quarterly time frames, etc. So in technical analysis, charts represent the single version of truth about the company, and technical analysis is all about studying the chart of a company's stock or a share. So the primary difference between technical and fundamental analysis is that technical analysis is mainly concerned with the current price and the history of the stock price movement. Technical analysis is only concerned in knowing how much an investor is willing to pay for a stock. It is not interested in knowing why the current price of a stock is what it is today. Whereas fundamental analysis is more concerned with why the price is what it is today and is the price really justified. So, what makes technical analysis an effective tool to analyze stocks? Friends, that is explained by a theory which has been given by Charles Dow and is also called as Dow Theory. We have a complete topic on Dow Theory in detail, but for now, let's quickly look at this theory in brief. So Dow Theory has certain principles on which it is based, and we need to understand those principles. So the first principle in the theory is price discounts everything. This point in Dow Theory means that stock prices reflect the ultimate truth. They represent all the necessary information about the company pertaining to its past, present and future. This principle means that the analysis of fundamentals such as economy, interest rates, currency, valuation, quarter numbers, crude, sentiments, etc. are irrelevant as long as the chart is analyzed well. The stock prices and the markets have already accounted for everything under the sky, so we need not worry about anything else. Technical analysis looks at the price and how it has played in the past and assumes it will continue to perform similarly in future under similar circumstances. Price movements are not totally random and move in trends. Technical analysis believes that stocks move in trends. So if you study hundreds of years of price chart of a stock, you will observe a fact that prices move in trends. If you see this chart, you would know that uptrend, downtrend, sideways trend has always repeated itself over a period of time. That's how prices always move. If stocks moved randomly, then it would be extremely difficult to make money using technical analysis, but that is rarely the case. A technical analyst believes that it is easily possible to identify a trend, take a position based on a trend, and book profits when the trend changes. And since different time frames can be applied on a stock chart, both short-term and long-term trends can easily be identified. Next, history tends to repeat itself. Technical analysts believe that the repetitive nature of price movements is often attributed to human psychology of trading and human nature in general. So human emotions like fear, excitement, pride, greed, hope, anger, sadness, etc. are all factors that affect the marketplace. Now, since human emotions repeat themselves, it affects the decision-making process, and hence there are patterns seen in stock movements which keep on repeating. In short, market participants always provide a consistent reaction or a consistent emotion to a similar market situation over time. Example, people always get fearful when the markets are falling and hence they start selling. This pulls the stock in a downtrend. They always do this consistently and hence human emotions are responsible for repeating history in the stock markets. History keeps repeating as long as human emotions keep repeating, which they will. Now let's see the main advantages of technical analysis. So the first one is to spot trends. The biggest advantage of technical analysis is that it helps investors identify a stock's trend. That is, whether the stock is in an uptrend, downtrend, or in a sideways trend. This analysis tells us about investor sentiments, which in turn gives us insights into the current demand and supply. High demand will push the prices up, while high supply will bring the prices down. So now we can judge the overall health of a stock or the markets. Next one is correct entry and exit point. Timing plays an important role in investing. You could use fundamental analysis in deciding what to buy, but you should always use technical analysis in deciding when to buy. With technical analysis, using a lot of chart patterns like the up flag pattern seen here and using other indicators, oscillators, investors can define their clear entry and exit points of a stock and thereby obviously giving them good profits. We'll see this one in detail too in our future topics. Next, quick and less expensive. Friends, fundamental analysis is always expensive as you need to dig in for a lot of information which may not be freely available, and it's also a very time consuming process. It really takes efforts to do fundamental analysis on a stock. Technical analysis, on the other hand, is less expensive, and there are many websites that provide free charting. If you are good at chart reading, you can analyze a lot of information very quickly and take some very quick decisions. Next, provides universe of information. Charts provide a lot of information about a stock. Information like volume, support, resistance, chart patterns, momentum, volatility, direction, demand, supply, etc., etc. And these are some examples of types of information that can be quickly interpreted from charts. A lot of other information can be extracted by other indicators and oscillators. This helps traders and investors build their positions and take short and long-term trades. So, a lot of information about a stock can be quickly and easily extracted when doing technical analysis. Now, let's talk about the disadvantages of technical analysis. And the first one is analyst bias. Technical analysis is not a hardcore science. It is a combination of art and science, and hence is always open to interpretation. And hence, biases of analysts come into picture every now and then. Which means, same chart can be seen in different ways by two different analysts. One may give a buy signal while the other can have a sell signal on analyzing the same chart. There are no formulas or perfect recipes of analysis. All analysis may vary from analyst to analyst, and you need to be very careful before you buy in any opinion of any analyst. Next, trend identification happens too late. It takes a while before you can technically analyze a chart and pass a verdict whether a stock is in an uptrend, downtrend, or sideways trend. And many times, by the time the trend is identified, it is too late, and entering into the stock actually becomes risky, and the trend may be at its peak by then. But again, identifying a trend is a skill. If you are good at it, maybe you can identify it much sooner. Like abundant stock advisors, we are good at spotting the trend sooner. Next, there is no formula. Friends, in technical analysis, a lot of indicators, patterns, and oscillators, they all come into picture. And not all of them work all the time. For instance, a buy signal is given when an up flag pattern is formed and a strong breakout candle is seen. However, this is not a rule. It is not steadfast and can be dependent on many other factors like volume, momentum, etc. On similar lines, what works well for one stock may not work for another. Example, a 50-day moving average may be helpful to identify support and resistance for SBI, but a 70-day moving average may work better for HDFC. So there is no formula, and you will have to use your experience and skill to come to some good decisions. Now, all said and done, friends, why you should learn technical analysis? We want to tell you something very important. In stock markets, our first aim should be to protect our capital, and the next aim should be to make profits. Technical analysis will help you achieve both. It helps us approach the markets technically with discipline and patience. We cannot buy stocks based on our gut feelings or rumors or news or recommendations from friends and relatives. We need enough technical reasons to buy a stock. Otherwise, we would just be shooting in the dark always and gambling with our hard-earned money. So through technical analysis, we will be able to pick the right stocks at the right time, exit these stocks at the right time, and overall take a well-calculated risk in the markets. We will be able to do a good risk management, thereby protecting our capital all the time. If you become good at technical analysis and have a good risk management strategy, you can make money even if you work with just a 40% accuracy. Yes, that's the power of technical analysis. So let's go ahead and open all the new doors. Some motivation as promised at the start. An investment in knowledge pays the best interest. Friends, invest in learning technical analysis. Who knows, you could take it to a totally different level with your skill. Maybe you could have a career in it. So give it the necessary time and energy. For many such amazing videos, please subscribe to our channel and hit the bell icon. If this video has added value in your life, please like and share. If you have any questions, please let us know in the comment section below and we will surely reply. Thank you. Jai Hind.